So let's go on to our next company here. And this company's been in the news, I think, for the past week or so, right? Talk about Kimberly-Clark. Their symbol is I almost said KFMB, KMB. Household and personal products, that's the industry that they're in. There's nothing on the short on the float or ownership here, and I'm not sure why that is, but we'll move on. We do say they do have a PE ratio of 17 versus 25.1. Price to sales 1.7 versus 2.5. Price to book value is expensive, 25.1 versus 4.9. But price to cash flow does look better at 12.8 versus 16.8. Again, valuation ratios, you want them lower than the industry average. Pretty good PEG ratio, 2.4, nothing for the industry. We do see over the last year, their earnings are down by 23.4%, while the industry was up 5.6%. That's not good. We do see sales fell by 1.9% for Kimberly-Clark when the industry was actually up 1.3%. Now, they do have a good 5-year earnings per share growth estimate from the analysts of 5.8% positive. The industry's a negative 9.7%. You get a nice dividend here, 5%. They use 84.2% of their earnings to pay that out, so that's pretty good. We do see a buyback yield of 1.2%. The balance sheet, let's take a look there. We got a current ratio of 0.8 versus 1. I'm okay with that, but I don't want it to drop much lower. Big problem here, debt to equity 5.5 versus 1.2. And I think what I'll try to do, Chase, is check the balance sheet when you're doing your research there. We do see that they have a net profit margin of 10%, just under the industry at 10.4. Return on equity, very good, 147.8 versus 27.3. So it's kind of telling me they probably have very low equity and maybe normal debt, but I'll, again, check that. Their free cash flow, $1.6 billion, below the industry at $7.6 billion. Chase, what do you got?
Yeah, so I'll give the numbers first, and then we'll get into the news of the week here. So the current price for Kimberly-Clark, it's $100.77. It has not performed well year to date. It's down 23.1%. 1 year, similar, down about 23.97. 5 years, gosh, down 26%. 10 years, down 15%. Definitely not a good performer. And This has been on the price return, not inclusive of dividends. So over the last 10 years, you probably made money because the dividend's decent, but again, probably not very much.
And they have well-known brand names.
I was going to get into that after the numbers here. But, I mean, you look out to December 2026, you see estimated earnings per share of $7.54. It gives you a target sell of $125.16. So it's trading right around 13 times those future earnings, a decent value. But this is where things get interesting. I mean, the reason it is in the news this week is they announced they're going to be buying Kenvue. And Kenvue is spun out of Johnson & Johnson. Kenvue has brands including Listerine, I love this one, Band-Aid, Benadryl, Tylenol, and obviously Tylenol has been in the news for, pregnant women and how it's like, oh, don't take Tylenol if you're, pregnant, and, that's kind of hit Kenvue pretty hard. I'm going to say I was pretty surprised to see this announcement, and the market did not like it. The market sent Kenvue went up on the news, obviously.
Right, yeah.
Kimberly-Clark went down over 10% after announcing this potential acquisition if it clears. And the reason I don't like it is if you look at Kimberly-Clark, their brands include Kleenex, Huggies, Scott, the paper towels, the toilet paper. I'm having a hard time seeing how Tylenol fits in with Kleenex. I don't see necessarily the synergies.
You get a cold, you blow your nose, and you might take Tylenol.
Maybe. Package the two together. I don't know. But it just seems like it's not in their core competency, and it seems like it's a different business than what they're operating.
Yeah, I kind of see that a little bit, but I think maybe they're trying to diversify. But I said I would check the balance sheet for you here, and they do have a lot of debt, $6.4 billion in debt. Now, it is down from 3 years ago to $7.5 billion, but their equity is very low. Their equity is like about $1.3 billion. So not a strong balance sheet. And when you're doing stuff like this, and what I don't think's come up yet, maybe I'm wrong, any lawsuits against Tylenol. I don't think that's happened yet. And I say yet because you never know.
Yeah, I mean, it's possible that does occur. And, I was kind of looking at the numbers on this deal. And Kimberly-Clark and Kenvue say that they have identified approximately $1.9 billion in cost synergies. Obviously, that's going to come from, laying people off, kind of simplifying the footprint of the business and so forth. But they also had approximately $500 million in incremental profit from revenue synergies. That's where, again, maybe they bundle together, your Tylenol and Kleenex. I'm not sure where that would come from.
Get a bottle of Tylenol with a box of Kleenex, yeah.
And they said partially offset by reinvestment of approximately $300 million. So that tells me there's really about $200 million in incremental profit there. But the cost synergies are expected to be captured in the first 3 years, according to them, following the closing. And when M&A to this magnitude happens, I got to tell you, I'm always very skeptical of these numbers. I always think they're overly ambitious, and many times I think they don't come to fruition. And your fear here as a Kimberly-Clark shareholder is that they obviously overpaid for Kenvue.
And I think they spun it from Johnson & Johnson
not too long ago.
Yeah, a year ago or so. And I'm thinking Johnson & Johnson didn't want it, which I think fits in very well to what they have. Why does Kimberly-Clark think it is such a good deal? I'm kind of missing that myself.
Yeah, so I guess it was 2 years ago. August 23rd, 2023 was when it occurred. But still, it's a very short time period to be a public company, about 2 years.
Yeah. So, not a buy.
No, the numbers, if it fell further, maybe warrant it, but I don't think I would step in and buy it, frankly, at these levels. I think there's other better defensive companies out there than Kimberly-Clark.
Too many unknowns and high debt. $6.6 billion.
And that's going to go up even more. This is a $48.7 billion deal.
Is it cash or stock?
Cash and stock.
So
that's going to dilute shareholders and also probably add to the debt side of the balance sheet.
Yeah.
Both negative.
Not a good thing at all.